Welcome to the Asset Revolution podcast, where each week your hosts from Arbor Digital provide educational opportunities for financial advisors and individual investors to gain knowledge in this emerging powerhouse that is digital asset investing. The Asset Revolution podcast is your connection to the future of digital assets and an opportunity for anyone to get off zero. Let's dive in. Alrighty, everybody, welcome back to the latest edition of the Asset Revolution podcast. I am very excited for today's guest, Bilal Little, who has an extremely robust background in not just in traditional finance, but in crypto or digital assets. And we are here today to have a very unique conversation, not just about digital assets, but about Bilal, a lot of the work that you are doing at your firm now, DFD Partners, and some initiatives you guys have. So I promise everyone today, you do not want to tune out. This is going to be a good one. But before we get started, Bilal, take a minute, introduce yourself to the audience here.
Yeah, thanks, Mark. So Bilal Little, president of DFD Partners, head of advisor engagement. I'll just tell you quickly what DFD is and then go about my background. But DFD Partners is a data-driven distribution platform and marketplace. So designed to connect unique, differentiated, resource-constrained asset managers to their ideal allocator, leveraging data and technology. So been here for about 5 months, but just by background, originally from Connecticut. I got a long journey because I went to school in New York, to Hofstra, where I played some football, but then started working on Wall Street at Neuberger Berman. Then it was owned by Lehman Brothers. So got great stories about that during the financial crisis and the bankruptcy there. But then in 2010, Neuberger Berman was expanding following the bankruptcy of Lehman Brothers, where they actually did an employee buyout. At some point, it will be a fantastic story, Mark. Like that story will be great when Neuberger decides to write that book, because they did an employee buyout where they basically offered the estate of around 49% and preferred equity, and the employees took 51% in common. And over the next couple of years, they basically bought the equity back, which is pretty dope. And then in 2010, they moved me, as the firm was expanding, to Southern California, where I covered the entire Southwest region. So I covered Hawaii, all of Southern California, Arizona, New Mexico, and Vegas. Pretty good job as a
could be worse places to be put towards
as a 27-year-old, right? But working with financial advisors, so wholesaling their investment products to financial professionals, and that was fantastic. And in 2014, I was really, really curious about other parts of business, so I decided to pursue my executive MBA at USC. And while I was there, halfway through that program, I joined BlackRock. So I was with BlackRock for about 6.5 years, covering, again, the same market. And in 2019, got tired of LA, taxes, cost of living, all that jazz, and moved to Miami. I did not know a pandemic was in was in pursuit, but moved to Miami, and it's been a fantastic run. So I'm married, and I have a 4-year-old named Phoenix.
Wow. Well, man, that is it. I can only fill in the blanks in my mind, but it sounds like a very inspirational story, and congratulations to you and all of your success and the family. Yeah, moving to Miami just before a pandemic. We could probably have a whole podcast episode on that. But take us through a little bit of your crypto story now.
Yeah. So my crypto journey, interestingly enough, through 2017, 2018, obviously when I'd say it picked up a little more momentum in mainstream media, I'll say, and everyone's talking about crypto. To be honest with you, I was pretty naive, and I continue to say, no, it's not a real thing. And I had a bunch of friends asking me about it. And because it wasn't in my traditional purview of traditional finance, I really didn't pay attention to it. And then a buddy of mine told me to watch one video. I'll never forget it. So in 2018, I watched this video from Bitcoin to Hedera Hashgraph. I think it was by Mike Maloney. It's on YouTube. It's like an hour, maybe an hour and 30 minutes, but he's the gold and silver guy. The video by itself literally gave me that aha moment, like, holy what are you doing? Pay
Mm-hmm.
attention to this. So that was 2018 for me. And like everyone else, just, like they call it the golf bug. When you start golf and you hit that one shot, for me, that was the eye-opening moment when I saw what this technology was doing to not only disrupt our financial system, but literally it's going to disrupt everything that we do. I could not stop reading and I could not stop searching. And I said, well, I need some formal insight. So I took the course at MIT on blockchain and the disruption of that technology. And the reason I went to MIT to take the course is because I was like, well, Gensler had gone here and, he's in a position of power. So I really need to better understand this. And it was really all about the application of the technology for me. And then I quickly realized that even within that course, no one was basically breaking down the complexity of, I'd say, distributed ledger and helping the masses understand it. So for my own efficacy, like I said, how do I simplify this message so I understand it so I can communicate it? So in
Mm-hmm.
doing that, I actually wrote my own crypto course, like a 101 course for the average investor in person, just to understand that there's a difference between distributed ledger, blockchain, which is a type of distributed ledger, and then
Mm-hmm.
cryptocurrency, which is the asset that moves along that particular network. And doing that right there, you would basically be able to help the vast majority of people understand what the technology is. But I realized no one did that. So my journey started in 2018. It had taken me, some personal bumps and bruises to learn, invest, and lose some money in wallets and all that other stuff. But that's the journey, right? And that's the excitement. And then my firm, BlackRock, at the time was making investments in FTX, and they were doing some interesting things. But I realized I wasn't part of any of it. So when I started asking questions, can I participate? I kind of got my hand slapped and they said no. And I said, I got to go do something. So in 2022, I left BlackRock and I joined Eaglebrook, right? Which at the time, startup just raised $20 million, $100 million valuation. They had all these great contracts. We were in talks and I was going over there to help them do distribution. And just didn't plan out. Obviously, crypto winter and things, resource constrained. So in that sense, had to look for a new opportunity and decided to build a platform with my partner. But crypto, deep in love with it, follow it every day. It's the most revolutionary technology of our lifetime.
Well, you just used the word revolutionary. So take us through a little bit, and I love to hear, since you've made that course, what is revolutionary about this? So if you can simplify it for anyone listening to this, what's revolutionary about it?
Simply put, you have technology that's disrupted money. Everything else. Technology, what's interesting about technology is it moves in one direction. It's deflationary by nature: speed, cost, efficiency, security. Everything, when it first comes out, you think 20 years ago, or just take 15 years ago when a cell phone first came out, like it was only for the elite. Today, the poorest nations in the world have cell phones and they don't need roads, right? They don't need that type of infrastructure because it's now affordable, whatever. And technology, because it moves in efficiency, speed, cost, security, and all of that, this technology is disrupting many legacy systems and businesses across the world. And for me, that was huge, 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 huge. When I built the course, I recognized that we had to help people where they are. And the way that I recognized this to be such a need was I held a free master class on a Sunday with some friends. We had 3,300 people in April of last year on that call. I'm going to say it again, 3,300. I had never talked about crypto to that many people besides my friend. We marketed the call for like 1 month. What let me know is there's enough demand out there. There's a reason that Coinbase has 70 plus million accounts. There's a reason that Robinhood started offering this stuff, right? And it's like the demand for the retail market was there, but they didn't have access. So I said, well, there's not enough simplified education courses out there for the general retail public. And I wanted to make something that was affordable that would just break down the basic steps. And let me just kind of say this because you wanted to, one, understand what the market was. No one even knows like what the market is. So you think like, your grandmother who's hearing about Bitcoin and all this other stuff. Let's just simplify. What is the market? Then we say, okay, what is it, like a broad overview of that market? All right. So you're making sense. Now you make an overview. And the next thing is, well, let's now properly assess what's happening. So when Bitcoin sells off, I'm seeing flow go into stable coins. So we simplified all of that to where people can now have training wheels to make their own decisions. And to be honest, man, we sold $500,000 worth of courses in 30 days.
Mm-hmm.
So that let me know the people and the demand was there.
Yeah. So it sounds like the very simple recap of what's revolutionary about this is just going to fundamentally disrupt money and the way people use and I think this is where we align well on this, is it's going to fundamentally change how people interact and use money. And us as advisors, we think about financial services, and we think about of the legacy systems, how do people get or receive financial services? And that's what we feel. And then that's just one industry or one market, financial services. Correct. And then we have all these others like cloud computing, decentralized social media, like everything else. And I think what gets confused, which is why, the education you do is so important then, is headlines versus what's really happening, helping people really create those mental models to separate. And I love the way you did that at the beginning with separating DLT from blockchain from the assets. And that's kind of where we've approached too. And if you just come in and kind of just do that fundamental piece, there's a lot of more of those aha moments, like what you and I have had and other people have had. So I love that. And then talk us about evolution. A lot of we like to that word we use here is like, it's just a normal part of life. It's a normal part of existence, is evolving from what we've used in the past to using that to progress for the future. And I think a lot of people get scared about it. Can you talk about maybe the evolution part of it and maybe the feelings and the emotions that come with that? Like, should people be afraid of this, or how do you guys see, how is this just an evolution of what we've been using for however long?
Yeah, no. So great question, right? Like I think the revolution part came because of trust, right? So Bitcoin's birth out of the financial crisis. So one, you have trust, right? So I look at revolution, I say, okay, well, there's a break in trust, right? And money is a trust-based system. Like that's just what it is. The evolution is money has to change with the times, right? So if we transact and do everything faster because people for convenience, well, then that means money needs to be more convenient. There should be, you think about society today, if someone comes from Cambodia, they come to the United States, make a boatload of money. What do? They send money back home. Well, the international interbank system is archaic. One, built, take the SWIFT system built over 50 years ago. It destroys the poorest nations and families because everyone's taking a piece before it even gets to, its destination. So that's just thinking about that. But just take simple evolution. 70 years ago, when they introduced credit cards, our grandparents are like, no, I'm going to use cash.
Yep.
Today, it's almost virtually impossible to do anything convenient, like book a trip without a credit card. You can't book a hotel or flight in preparation of without a credit card. Yeah. You're not going to physically go somewhere or write a check. You can, but that's an old legacy system. So the credit card provided convenience because obviously technology has come in and people can transact more and they can transact easier and faster. As we think about where we're going, if we're going to be transacting even faster with these super powerful devices called a cell phone, well, then it needs to basically be able to settle instantaneously and or faster, right, for convenience. So evolution is, like I said, it's deflationary by nature, and technology provides that because there's an amplifier of technology, right? Just think about this whole conversation. I'm not going to switch the conversation, but think about this conversation of AI. This is how fantastic humans are. We taught ourselves math. Now math runs the entire world. We taught our math how to math. We taught our math how to
say that one more time. Well, let's let that breathe for a second. Say that one more time.
We taught our math how to math. Like it literally is teaching itself based off of something we built as a foundation. And that's essentially that's just a great example of the speed in which technology kind of continues to evolve. and money and the disruption and the flow of that is just one aspect of it. So we go from obviously this trust being broken with this sort of revolutionary approach, and then the evolution is obviously just a natural progression of technology.
Yeah, and I'm glad you hit on all of those points, because one thing that we hear a lot, and especially when you see in headlines or certain things, Charlie Munger just put out a piece, and we're recording today, it's February 8th. Charlie Munger just put out a piece about the asset, not the technology, of Bitcoin and other crypto assets. And a lot of people will then apply what he's saying about the asset to the technology. And that's the mistake we see people making. But I think what also gets lost is a lot of the feedback we get and the question we get is, why do we even need this? This isn't needed, right? And I think you and I both have made our own posts about that type of feedback. And I think the first thing I always say to those people is, one, you got to check your privilege then, because most of the world needs this. Just you and your world don't need it. And that's fine.
Correct.
And that's just, you're lucky. You're in the chosen few, right? And we both have our own backgrounds to where we've been, of our communities to where we don't have that privilege. So that's the first thing I would say to them. And then the second thing I tell them, think about, and you just question back to them, right? And this is how you open people's minds, and you get this, and this is where I'm hoping our listeners, I want you to ask yourself too, what has unlocked, if you think the US or other, developed nations are the most prosperous and the most, they've developed a lot of economic activity that has helped raise our standard of living, what has unlocked all of that? And you've said the word 17 times already on this call, that's technology. And so there has actually been clamoring, especially in financial services, because even in financial services, a lot of the systems that you mentioned, like SWIFT or the international banking for settlements, like all of those systems are working on 1980s and 1990s software still. Like, it's unreal to me. So once you put those things into place, you kind of realize, like, oh, this also, and this goes to answer I let them answer the question. This technology is the thing that everyone has been looking for to unlock the next stage of economic activity, economic prosperity, raising the standard of living. And that's where I think you and I get excited, is this is also going to raise the standard of living of the bottom, not just propelling the top to keep them overweighting even more of the top. And we can get the bottom and the middle class and everyone too. And I know that's super inspirational, but
so great point, right? So there's one question, like I speak on panels all the time, and I said, like, let me ask you one question. If you think we've reached the pinnacle of technological innovation, right? Actually, I heard Rick Edelman say that. He's like, to his clients, he said, or to an audience of maybe like 700 advisors, he's like, if you think we've reached the pinnacle of technological innovation, don't do nothing. How many of you believe that? Not one hand went up. Well, if that's the case, that is the case. Just think about it. The world runs on two natural resources, if you will, or limited resources, gold and oil. I would venture to say Bitcoin is now the third. And I think that's a strong argument. But what you're seeing is there is trust being built on Bitcoin than then even the other two. Because at some point, we have to figure out how to wean ourselves off of oil. They just in Uganda found just as much gold that ever existed from a new mine. So at what point does limitation, scarcity, and store of value really come into play? And then how can I move it? Because I can't move any gold, and I definitely can't move and process any oil. So if I'm just like, you know what I mean? The generation of today that's grown up during the cell phone era, that's grown up through technology, they are going to embrace that even over gold and oil. Right? And at some point, they're going to, I think society is going to have to catch up, because as more baby boomers die and the wealth is transferred, you've seen the Bank of America report, the millennials want digital assets, they want real estate, and they want private investments. So the advisor community is going to need to offer it, or they have business risk at some point.
Yeah, and that's part of what the both revolutionary and evolutionary case of the technology is. It's going to enable advisors, and again, we get so excited we can have a whole nother episode on that. And that's why it almost just makes sense. And it's like, and this is what I tell people. And this is one of the things that I learned as an advisor. And this is just the reality and the truth of the traditional financial services business. And it's sad, but I think we're moving away from it. What I would like to see is that if I get a $5 million client that walks into my office, I'm going to be able to service them a certain way right now.
Mm-hmm.
But then if a $100,000 client walks in, and when I say 5 million versus 100, that's their net worth that I have to work with as an advisor to help them achieve their goals.
Yep.
Right now, that $5 million client can get every single financial service they want, and they can get the best quality of financial planning, of wealth management, estate planning, tax planning, you name it. That $5 million client will get it because they have the net worth to do it. That $100,000 client right now, if you walk into any firm, I don't care who you say, and I will stand by this, Raymond James, Charles Schwab, Fidelity, Merrill Lynch, any traditional name, throw it out there, that $100,000 client does not get the same quality of service or the same portfolios as those $5 million clients. And my big thing in this industry, and I've got a long way to go on this, and this is partly of why I'm here, is I think this technology enables advisors to give the same quality, the same portfolios, and the same service to that $100,000 client of net worth as they do to their 5 million. And there's going to be no difference. And then what I think that does from a society standpoint is we can then start breaking down where we assign value to human beings based on their net worth. And
Absolutely.
I think because once you can have everyone getting the same portfolio because of this technology, it's going to break down so many of these things that have just naturally come up in traditional financial services.
So Mark, here's let me just piggyback on that. Our biggest financial institutions have already introduced and or are leveraging some level of blockchain and or distributed ledger. Like you take the DTCC, they have already published on their website.
Real quick, who's the DTCC?
So it's basically the largest organization that any and every person needs to pay attention to. They basically settle just about every trade globally. So somewhere around $2 quadrillion a year settles. So they do a lot of the back end settlement for stock trading for a lot of platforms and firms. But just take this firm for an example. They're working with a company called R3, which is a hybrid blockchain. And they've already talked about going to speed and transit and transacting faster from T+3 settlement to T+0 and or T+1. Well, the only technology that's going to allow them to do so, blockchain. Hey, go figure, right? You look at our biggest banks, all of them from JP Morgan to Wells Fargo, Bank of America. Bank of America filed like 170 patents around blockchain. Like these folks are already starting to implement this technology, and they're testing it. And there's a fantastic piece called Sandbox's white paper. Really changed my life. And this is when I realized countries, they were just moving different than the rest of society. They started writing white papers, and it's called Sandboxes, where they basically have collaborated together, the World Bank Organization and World Bank Group. They've collaborated together to identify markets across the world where a lot of these emerging technologies could theoretically go test these markets out. This is why you see more crypto wallets outside of the United States and emerging in frontier markets, because we are like, hey, can you provide proof of identity? Can you transact here? Can we support these smaller merchants? So forth and so on. So this technology is already taking shape. And to your point, it's going to allow greater inclusion financially.
100% agreed. So I wanted to use that as a segue too, because I think you have very interesting thoughts. So you've been on CoinDesk, you've talked on a lot of panels, as you've mentioned. I think one of the very interesting things, and I think there's many people who take this approach, they see Bitcoin, we're going to go to the investment side. We've talked a lot about technology, and I want to just spend a few minutes on the technology before we kind of go into, I want to hear more about just your firm and kind of the initiatives you have. But let's stick to the investment case now for Bitcoin. You mentioned that Bitcoin will be that third resource aside from gold and oil. Tell us, how do you think that fits into an investment portfolio now? Why is that case, and what do you see it as in a traditional portfolio?
Yeah, so I think, if we're talking store of value or where there's always going to be value had, right? Bitcoin stays there. I think anywhere in a portfolio, first of all, not having any exposure is a bet against yourself and a bet against technology and the innovation there. So that's one. I think anywhere between a 1 to, call it 4%, depending upon who you are, what your needs are, it definitely deserves a position in the portfolio. Again, this is the most revolutionary technology that we've seen in our lifetime, and it's growing faster than the internet as far as adoption goes. So if I'm anyone to say, even if I don't understand it, well, you might want to just take a little bit of time to get the basics down of what the technology is and how it can actually be a benefit. Now, again, this is also a trust system that at some point we continue to lose trust in our governments and our financial systems, the way that they run. I mean, how does the United States offer you a credit score, yet they can't manage their own budget and they're 20 plus trillion, $30 trillion in debt? Like, just make it make sense, right? So at some
Mm-hmm.
point, we're going to continue to see the adoption of Bitcoin, and it will be added to portfolios. So my thought process is anywhere between 1 to 4, probably even 5%, depending upon who you are, what your risk tolerances are.
Wonderful. And
I
again, I
call it, I
think,
call it, I call it, let me just say, I call it the call option. Like,
yeah,
you know what I
yeah,
mean? Like, why not? Why
yeah.
not?
No, and I think, and that's where a call option, I think, is very important for just the general education of most invest. I think the general investor and financial literacy is very important. I think we're both passionate about that. I think we can't be afraid to educate on what a call option is and why they're so valuable and why they're used and have been used as instruments
Mm-hmm.
in investing, in the history of investing, because
Mm-hmm.
there is value in a call option, and and I think people every day have call options on certain things, right, in their everyday life. And so that's where we need to not be afraid of that. And I think we totally agree that, having this can be seen as that as well, even if you just value having the option, having the call option, to be able to say, you know what, even if I don't, I have this call option on my portfolio now, just in case things go
There's
sideways.
the
It's just,
there's the potential upside on the other side of that trade. If I'm able to hold that security at cheaper today and it's worth X, percent later,
mhm.
that's going to grow faster than the market. It's
Yep.
okay to take that bet in a balanced portfolio that's properly diversified.
And like you said, not taking too much of that risk, though, to where if it doesn't go your way, it harms you in your
Right.
financial situation and you can't achieve your goals. And that's the piece I think a lot of people, what we see, and we see it in the marketplace, if you will, we see a lot of people taking these outsized bets
Mm-hmm.
all at once and then not
Mm-hmm.
having any plans for the other decisions that need to get made when you invest, right? And I think that's the
Mm-hmm.
thing when we help educate just not only crypto investors but general investors, is when you talk to a general investor, most people plan for one thing. What's the one decision that most investors plan for?
Mm-hmm.
Do you know, Bilal? What's
Should
the
they plan
one
for
what's the
risk?
one decision that most investors, if I'm just a mom and pop and I go in and I see
Oh,
I open an account, what's the one thing
mhm.
I know what I'm trying to do?
Retire.
Retire. Exactly. So they only think about entering the market to be able to achieve that retirement, right? And so
Oh, I was
the
right.
sorry to put you on the spot there, but you performed valiantly. So the other two things is also what happens in between from when you enter. What happens in
Absolutely.
between? There are decisions that need to get made in between. Again, life happens, right? You can't not plan for something. And then
Mm-hmm.
the last thing is the exit. When do you exit this? There's going to be an exit. You just may not see it from now, especially if your plan is retirement. Let's
Mm-hmm.
plan for that now. Why wait until retire? I think the biggest mistake we help educate investors on is that when you invest, you don't plan for the exit when you get to the exit or when you're just before your exit. You plan for the exit before you actually enter the markets. And so I think that's something we've
Absolutely.
been helping a lot of crypto investors do, because most crypto investors don't even think about the in between or the exit. And if they did, I think you would see a lot different decision making, not just with general investors, but maybe even the people in places that have been doing a lot of risky bets.
Absolutely.
Um,
Absolutely. Absolutely. Well, you also have to think, right? Like, we have a math problem when it comes to fixed income and equities, right? And people, for the first time, they opened up their statement last year and they saw, negative 10, 12% out of their fixed income allocation. And you got this baby boomer generation that has a significant allocation to those fixed income securities. And yes, bonds may be back today with the Fed's obviously recent decisions and what they'll do going forward. But I mean, you're down 12, 15%. It takes a long time for a bond to get that type of return back. So you need to start thinking about the portfolio differently, be a little more constructive about the asset classes that you have in there, and the investment vehicles, right? So obviously taxes play a major role, but the asset class is just as important. And being able to effectively allocate to, asset classes that can still help you get that growth rate is important.
Absolutely. Very well said. Well, good. I'm glad we got to talk about the technology. We've now talked about the investment case a little bit on the assets themselves. Now I'd like to kind of switch gears and give you a little time here, because I think one of the reasons, and full disclosure, I should have said this at the beginning, but Arbor Digital does have a relationship with DFD Partners as our outsourced distribution partners. So I'm going to try not to be too biased here, but I think we also align from a value standpoint. We believe not just in you as people, but in what you are trying to achieve in representing underrepresented asset managers and financial professionals in this industry. Take us through a little bit of DFD and your mission. I know you have the big initiative, and I would love for you just to tell the audience a little bit more about that.
Yeah, look, so just understand like where my founder, the CEO, Devon Drew, and myself, where we come from. Traditional finance, wealth management, where we both work for the number one and number two largest asset managers. So I was at BlackRock, he was at Vanguard. Collectively, we raised over $50 billion for these large managers. And, while you're at these organizations, of course, you believe in the mission. You guys are a collective team, right? You understand what you're trying to do. We do believe in the shared vision where we're trying to help people retire better and all these other things. But what we quickly recognize is, especially if you have any background in crypto, is they become very centralized. And you're seeing a lot of backlash in those managers today, just in their sheer size and what, some feel they're calling as far as a push on ESG or whatever it may be. But their size gives them so much clout. And what you recognize is that there are a lot of managers out there that are too small. They are resource constrained. They can't pay people X amount of dollars to go out and do distribution. They have really, really good strategies, really talented. Many of those folks, like you, me, we've come from those big firms, and we say, hey, there's a better way to do something. There's another perspective, and they go out and they build their solutions. But DFD Partners comes in is where we want to help elevate and prioritize those differentiated asset managers that have solutions, that want distribution and that want to work with their ideal allocator. Now, the ideal allocator wants to identify these unique managers as well, because they want to offer something differentiated than just a BlackRock or a Vanguard or State Street. And they want to share in different views because their clients want different solutions. So DFD Partners, again, is a data-driven distribution platform designed to elevate unique, differentiated asset managers that have a unique product solution. In this case, Arbor has crypto, digital assets, and a uniquely managed SMA, and connect them with their ideal allocator advisors that are looking for differentiated managers. They want to offer something that's unique because the client demand is there. And our big initiative is an acronym that stands for Bridging the Investment Gap, where our goal is to raise $1 trillion in AUM amongst diverse, differentiated managers. And we have some pretty strong partnerships. We work with a nonprofit called IDIF. We work with unique groups like Quad A, which is African American Association of Advisors. We're close to pilot programs with many of these other firms that represent and support Pride members or veteran groups or crypto as an asset. We look at diversity differently than everyone else. Diversity, I mean, I don't mean to go on this, Mark, but diversity is not just ethnicity or gender. Diversity of asset class, diversity of thought is just as important. And crypto is all about diversity of thought. And how do we support managers when they're going up against, a behemoth of a BlackRock or a Vanguard? Technology is the only way. And we believe in technology as the great equalizer.
No, I love that. And thank you for going into more details on what those things are. Again, we are very aligned in that. And I love that you use the term differentiated asset managers, but make that, what is layman terms? What does that mean? Like, I know you mentioned a couple, but what is a
Yeah.
differentiated asset manager?
Yeah. So like I said, diversity in thought, right? So imagine, no, not even imagine. Let's just look at it. BlackRock, Vanguard, State Street, and the top 20 asset managers control 50 cents out of every dollar. Differentiated would be anyone who is not them, essentially, right? Let's just
Mm-hmm.
be honest. Who else out there looks at large cap growth differently? Who
Mm-hmm.
else says, okay, crypto should be more than just Bitcoin and Ethereum? Who else says, you know what, instead of us going long, how about we also go short a position? Instead of it being Kathy Wood's ARK, what about SARK, which is the short or inverse ETF of
Mm-hmm.
ARK, right? There are people who have different perspectives on how investments should look. And there are other people who want to invest alongside of that because they don't believe in Kathy Wood's ARK, or they don't believe in BlackRock being the soothsayer for when it comes to ESG, whatever that may look like. So differentiation in perspective, views, asset class is more important to us than anything else.
Love that. Thank you. I just wanted to make sure we made that real for the audience, because I think we do tend to say a lot. And when you say those things, I understand what you're saying. But then
Mm-hmm.
for the general audience, I think just giving them that little bit more of context helps them to connect with that, and because it's
Like,
so it's so powerful.
yeah, like take yourself, right? Like if I said, Mark, you're always trying to differentiate yourselves. Like, why would I invest in Arbor versus Eaglebrook versus Flourish versus On Ramp, right? Like you're fighting. Every person in business fights that, right? Like we are different because of these characteristics. For us and our platform, data is the ultimate decider. The data is going to determine who wants to allocate to Arbor strategy versus Flourish and versus anyone else. And we're saying, how do we highlight and elevate those differentiated managers and give them the resources they need to effectively compete and scale against a BlackRock or Vanguard or State Street when they are resource constrained?
That's great. And again, I think many, for the general investor, may not say this is more of a back end. So I think the institutional side may understand more of the value in this. And I think on the back end, just for those, as you mentioned, the stat, the top 20 asset managers, 50 cents on the dollar, are managed globally. And so this is an opportunity. Again, we talked about technology a lot in this episode. Technology is only going to enable players like Arbor or smaller asset managers to be able to compete and be able to get that distribution a little more widespread for the future. And that's very, very exciting. And that means more optionality for you as general investors. So if you're a general investor listening to this, it means more optionality for you. It means
Mm-hmm.
more diversity in thought, that you don't have to just go along with what everyone else is doing. It means you are going to have decreased cost without sacrificing quality, which is great. Again, for me, that's what I hit on a lot, is like, we can decrease all of these things that cost a lot, but then we don't have to sacrifice the quality at which we're delivering to clients and which we are delivering to
Yes.
people. And I think for you guys too, that's very much in the ethos of, we don't want to sacrifice quality of manager to then still connect them with the right allocators and the right people. I mean, it's all data. I mean, the world runs on data. I mean, everyone, you mentioned the three resources. I would
Mm-hmm.
wager to say that the fourth resource that is
Yeah.
intangible is
Yep.
data.
Yep.
Um, Data runs the world. And if you
Yep.
don't believe that or understand that, then I think, again, the future is going to be a really rough world anyway. But anyway, I'm
Yeah.
about to
No.
get on my
No.
soapbox for something, but
No. No. You brought up something like for the general retail and public is customization and optionality and choice are everything, right? They're everything today, and they will be going forward because we've now embraced individuality, whatever that looks like. But you also want that to be reflective in your portfolios. Many people want their investment views to actually reflect who they are and where they are in their lives, rather that's the E in ESG or the G, right, the governance side of ESG, or look, it might be social issues, right? Like those things, rather you work in that particular space and or you've started to research and you're trying to pivot to that space, right? That is going to also drive a lot of your investment behaviors. And that's how it was with me when I started to learn about digital assets. I literally flipped almost 50% of my portfolio personal, because I'm like, I see where technology is going to take this thing in the future. Right. And if you don't have a Bitcoin, allocation today, you can do $10 a day on Cash App. Like there's so many different ways to onboard into digital assets today. It's much more democratized than many other platforms. And that's why you saw the proliferation of a Robinhood or a Webull come in the market, because they service the retail, and the retail market is hungry and starving for more optionality and choice. So I'm glad you kind of brought those points up, because they will be reflective of investment options in the future.
Yeah. Oh my gosh. So we need to bring you back on for 3 more episodes where we talk about more things like that. And I think we would have a really cool conversation around the investing behaviors of the next generation. Because obviously, as both of us being part of that next generation, and then having our foot in the doors of the older generation. And that's where I think we're in unique positions. Like I always tell people this too, is I have the unique position of learning from and understanding the previous generations. So I understand and connect with them, and vice versa. But then we also now have, as we have older kids, as you mentioned, you have a 4-year-old, we actually have now our feet in our livelihoods in the newer generations. So there's this interesting place. And I think this gets lost. I think previously you had other generations in the same position we were. And I think that's what also gave them the perspective they needed to build and to create the things of value that have propelled us to new heights. And that's just the cycle we're going to go through again. And that's kind of where we are. But anyway, I know you,
Marcus, let me say one last thing, man. It's imperative that we have the right perspective of where we are in society, right?
tell me more where you're going.
Our parents thought they were crazy when they adopted credit cards. And credit cards, and the people started using credit cards. They're like, man, you're crazy. What are you doing? I'm using cash. And over time, you slowly saw that take shape. And I think the same is happening when it comes to digital wallets as well as cryptocurrency, and to be able to transact on unique networks that pertain to whatever it is you're doing from a business perspective, right? Rather, if you're a gamer and you are being compensated to that native chain, and you're being compensated, obviously, tokens to that chain. Well, if you're able to make money doing that, and that suits you, and then you can actually convert that money into a different currency, and it's used for your utility to buy and sell goods and services. Well, that is the internet of value, and that is where we're going. And I think that choice is one that has perspective that investors today should adopt and embrace. So
I can't say anything better than that. So I'm going to let that live there. And I'm going to end this conversation. And man, I've enjoyed this so much. I have literal goosebumps just hearing you say that last part. And so I'm going to try to regather myself, because I do like to end every episode with a couple quick fire questions just to let the audience get to know you a little bit better. So I didn't prepare you for any of this. So I need to ask, like, are you cool? Can I do a couple quick fires with you?
You got them. Are they one-word responses?
Yeah, so give me in one word or one phrase answers to these questions.
Okay.
First question. What is your greatest achievement outside of work and family?
Climbing Mount Kilimanjaro, pushing my body to the limit when I was alone in the dark, freezing below 30, and I was weak. Sorry.
That's good. I love that. Oh my God. Again, I have more questions, but I won't ask them. All right. Second question. What is one value you've taken from your parents into how you operate today as a human being?
Be a giver.
Ooh, I love that. What's your biggest pet peeve about people in digital assets or the crypto industry?
Limited perspective. They don't think broad enough about utility and bringing more people along with them.
Very nice. Yeah. And then a last question kind of along similar lines. What do people who are against crypto or digital assets get right?
What do they get right?
Yeah.
the time that it takes to be embraced. That's the only thing they get right. It's going to be adopted. It's just a matter of time.
All right. Those are my quick fire questions, man. You nailed it.
That was strong. That was strong. You had me thinking there.
Good. That's what they're designed to do. So I appreciate you going through that little exercise with me. And Bilal, we are at the end. And please, if there's anything else you would like to say, anything you'd like to shout out, please take 30 seconds for that.
Yeah, I think, folks that are interested in what we're doing, to follow us on all social platforms at DFD Partners. Add me on LinkedIn. I'm an open book. Would love to connect. I like ideas. I like to connect with people, and I want to know what you're doing. I'm just talking to the broad audience, and if there's a way that I can make a connection for you, I would love to do so. So thank you, Mark. I love the platform. I love what you guys are doing, and more exciting things to come.
Well, we are so excited for our partnership. We are excited to work alongside with you in this journey. And thank you for taking the time and energy today, being so genuine. And I can't wait to bring it back, Bilal.
Thank you. Let me know how it goes. We gotta make sure we push this.
All right. Well, thank you everyone for joining. We'll see you next time. Be sure to tell someone today that you care about them, and we'll see you then. Cheers. We appreciate you listening to this edition of the Asset Revolution podcast. I'm your host, Marc Nichols. Please don't forget to let us know how you like the show by rating and reviewing us on Apple Podcasts or wherever you like to listen. For more downloadable digital asset resources and educational opportunities, please visit us at arbordigital.io. We are here to help you get off zero safely and securely. Thanks again for tuning in, and be sure to tell someone you care about them. Cheers.
Financial advisor, unless you're under contract with or actively speaking with Arbor Capital Management or Arbor Digital, a division of Arbor Capital Management. This podcast is just that, a podcast. It is not financial, legal, or tax advice. If you have individual questions, please reach out.